What's going on with the Omaha real estate market as we enter the holiday season? Where is the current inventory? Are prices still going up? What about interest rates? These questions and more will be answered in today's video, and we're going to get started right now. Hi, my name is David Matney with Nebraska Realty. I'm a local realtor here in Omaha, Nebraska. Now let's jump into today's topic. Let's talk about some good news and look at interest rates. Interest rates are starting to move in the right direction. Rates are now at 4-month lows. Just a few weeks back, rates were over 8%. Now they've dropped almost a full point. Now, according to Mortgage News Daily, the average 30-year fixed rate mortgage is just a tad over 7%. Now, if you're buying a home using FHA financing, rates are in the mid-6s. Now, a few weeks ago around the office, you could sense that activity was really affected when rates were at 8%. Now that rates have dipped, you can tell that some buyers are getting back into the market. With Christmas time, showings and activity naturally takes a little bit of a dip just because everybody's dealing with the holidays. I think the other thing that buyers are starting to realize is that the rates of a couple years back are a thing of the past. If they want to own a home, they're going to have to buy at the current rates. When rates go down, more buyers can afford to buy a home. Now, affordability is a real issue. Home prices have gone up tremendously, especially in the past 3 years. Nationally, the median sale price of a home in the United States is $431,000 in the third quarter of 2023. Many people were expecting home prices to crash as rates increased, especially if you like watching YouTube. Nationally, prices did come down from their peak in the fourth quarter of 2022. However, remember that real estate is like the weather. It's local. Every market is going to behave differently. 2, in any market, there's going to be opportunity. And then 3, there's never going to be a perfect time to buy a home. Trying to time the market is a fool's errand. Okay, I think the best course of action is to look at buying a home the way Warren Buffett buys a stock. Buy a quality home at a fair price, and over time, you're going to win. And here's the other thing too. Buying a home is a very personal decision. Buy one when you're ready. If now's not the right time, that's okay. In the meantime, start savings, take care of your credit, so when the opportunity does present itself in the future, you can make your move. There's never going to be a perfect time to buy a home, nor does the perfect home exist either. Now, if you look back a few years ago when rates were at 3%, buyers were buying homes without home inspections. They were waiving appraisals. Many buyers had to pay well over list price, and many buyers were making 5, 6, 7 offers before getting a home under contract. So they didn't even get their first choice. Even with the historically low interest rates back then, it wasn't a perfect time to buy a home. In fact, there was a recent survey that found that 93% of buyers had regrets when they purchased a home. What about home prices in Douglas and Sarpy County? Now, the median closed sales price during the month of November in Douglas and Sarpy County was $310,000, and that's up 4.4% compared to November of 2022. Even with interest rates increasing, you've seen price appreciation. And then here's the other thing too. When we're looking at November prices, that's actually the contracts that went under contract in October, and October had 8% interest rates. So if you're a buyer, it may be time to start thinking about coming back off the sidelines. When it's this time of year, nobody's thinking about real estate, and I can even see that in my YouTube channel. The views and the subscribers go down. So let's go ahead and buck that trend, and do me a favor, subscribe to the channel for more videos on the Omaha real estate market. Just for fun, let's look at the price differences between Douglas and Sarpy County. Now you can see that for those of you not from around Omaha, Douglas County contains the city of Omaha, and Sarpy County, which is just to the south of Douglas County, contains the cities of Bellevue, Papillion, La Vista, Gretna, and Springfield. And what you can see is that Douglas County prices were up 4.4%, versus Sarpy County at 8.8%. So prices are higher in Sarpy County. Now, some of that is because when you look at Omaha, the development occurs to the west and to the southwest. And what you'll have is in Sarpy County, there's a lot of development along that 370 corridor in Sarpy County where Gretna is, and that's where you're seeing those increase in prices. What about the home prices over the last 5 years? Now, we're going to look at the median closed sales price in Douglas and Sarpy County. And if you look back to 5 years ago in November of 2018, in Douglas and Sarpy County, the median closed sales price was just over $201,000. Now, you compare that to November of 2023, when the median closed sales price was $310,000. Looking at this graph, you're also going to see the effect of seasonality. Prices tend to peak in the summer months, they decrease in the fall, they bottom out in the winter, and then they ramp back up again in the spring. And that's normal because the most expensive homes tend to sell in the summertime because those folks purchasing those homes tend to be folks with families, and those families want to move when kids are out of school. Let's take a look at the number of homes for sale. Now, November inventory is up 22.6%, which is good because more inventory means more choices for buyers. As we move further away from the years of the pandemic, more inventory will eventually hit the market. Why? Because life happens. People get married, get divorced, pass away, and change jobs. When a life event happens, it creates a real estate need. You can look at the number of homes for sale in this graph, and you can see that more inventory is being added to the marketplace. Now, in this graph, we're going to see new listings are up 30.7% compared to November of 2022. And you're also going to see in this graph that you're going to see that during the winters, there's fewer new listings. And then as springtime occurs, more new listings hit the market. Let's look at pending sales. Now, pending means a home is under contract. This shows the peak months for homes going under contract is April. April contracts mean June closings. When you look at closed sales, the peak is in June. You can see the number of homes sold this year was not as high. Fewer sales occurred. Again, as we move away from the pandemic years, I think you're going to see more homes being closed. Let's look at the number of closed sales for the month of November. We sold 742 homes last month. Remember, November closings are a result of the homes going under contract in October. And remember, October we had interest rates around 8%. So if rates continue to come down, I think you're going to see more sales occur. Speaking of selling your home, if you're looking to buy, sell, or invest in the Omaha area, my contact information is in the description below. It doesn't matter if it's now or a year from now. If you have any questions about the Omaha market or buying or selling, please feel free to reach out. If you are a home owner and if you're interested in a free valuation of your home, I have a really neat tool called HomeBot. It's free and there's no obligation, and it will send you a monthly email on the value of your home, and I'll leave a link in the description below. What about the days on market? The average number of days on market in the month of November was 17 days on the market. Now, the median days on market during the month of November was 6 days on the market. Now, I've been doing this for 20 years, and if you look at the current market, homes are still selling quickly. Now, if you go back 20 years and you look at the days on market, the average days on market during the great financial crisis, the average days on market, and look back to the years 2008 to 2012, there were many times when that average days on market was over 60 days. If you sold a home back then in 30 days, the seller was thrilled. Sellers back then were going through 2 or 3 agents before they got their home sold. So many people like to compare today's market to the market of 2006 because they think the market's going to crash. Now, here's the problem. In 2006, if you fogged a mirror, you could buy a home. In the early 2000s, there was a push to expand home ownership, which is a good thing. But if you have a bunch of people buying homes that can't afford them, then that's going to be a problem. These people didn't make their payments. And guess what? These homes came back on the market. Now, look at the inventory back during the great financial crisis in the Omaha market. We had well over 5,000 homes on the market. Now, today we have just over 1,800. Now, back then, I remember when it was normal to have 12 active listings on the market. Those days are long gone. Buying a home now is tough. The problem is its affordability. Only the best of the best financially qualified buyers can buy a home in today's market. Let's look at the month's supply of homes on the market going back 20 years. Look back during the years of the great financial crisis. We had over 6 months of inventory on the market. Now, you compare that to today, we have just over 2 months of inventory. Now, one thing that's kind of interesting when you look at this graph is you're going to see there's a little funny looking dip just after 2009, and that was when they had the $8,000 home buyer tax credit, when Obama instigated that as to kind of stimulate the housing market. Just as a reminder, 0 to 3 months of inventory is a seller's market, 4 to 5 months of inventory is a balanced market, and over 6 months of inventory is a buyer's market. Let's look at home prices over the last 20 years in Douglas and Sarpy County. Even during the great financial crisis, we didn't have prices tank in the Omaha market. It took longer to sell and there were more homes available, but prices didn't take this big nosedive. Back then, $140,000 could buy you a new home. And compare that to now, where the entry-level market for new construction is just over $300,000. Now, there's one certainty in real estate, and that is the market is always changing. There's all sorts of doom and gloomers out there pushing a real estate crash. Prices fluctuate is a normal thing. And some folks out there will say, well, some builders are lowering prices. True, the house is not coming down. The builder is lowering their margins. Price to develop land is not coming down. The regulations that drive up prices are not going away either. Can certain markets take a hit? Absolutely. If prices in Austin, Texas go down, that doesn't mean that home prices in Omaha are coming down. All markets are local. If someone else eats a taco, it doesn't make me fat. Now, here's another possibility too. You might see some form of shrinkflation. Builders may adjust what they build in the future. You might see builders build something a little smaller. However, the problem with doing that becomes the issue of profit. Builders have to maintain profitability. Maybe the government has to ease up on some of the restrictions. Speaking of cost to build, let's look at the price of lumber. Now, the lumber prices have settled down. It's not the market of 3 years ago during the pandemic. The price of lumber has come down and is currently at $528 for 1,000 board feet. Let's look at unemployment. Now, the other thing to track is unemployment. The job market is closely related to the real estate market. When a job is created, it creates a buyer. When a job is lost, it removes a buyer from the real estate market. When unemployment goes up, it's obviously bad news for the person who's lost their job, but unemployment going up is good news for mortgage interest rates. When the economy slows, the Fed tends to lower interest rates in order to stimulate the economy. Unemployment has ticked up slightly, so the Fed thinks the economy is cooling, so they're less likely to raise rates. In Douglas County, the unemployment rate was 2.6% versus 2.7% in 2022. In Sarpy County, the unemployment rate was 2.3% compared to 2.2% in 2022. The Omaha area is still better compared to the U.S. unemployment rate. The current unemployment rate in the United States is 3.6% in 2023 compared to 3.4% in 2022. Now, if you like today's content, be sure to give this video a thumbs up. And if you want to learn more about the Omaha area, please be sure to watch this next video, and you make it a great day.